Hey everyone, welcome back to the channel. Today is February 2nd, 2026, and we're doing something different. We're hitting the streets, visiting actual coin shops here in the United States to see what's really happening with silver premiums after one of the most volatile weeks in precious metals history. If you've been following the silver market, you know that just 3 days ago, on January 30th, silver experienced its largest single-day crash since 1980. And we're talking about a 30% drop in a matter of hours. Silver went from hitting an all-time high of $121.67 per ounce on January 29th to crashing down to the low 80s. As I'm recording this right now, spot silver is hovering around $81 per ounce. But here's the thing, spot price is just paper. What we really care about as physical stackers is what you'll actually pay at the counter. So today, we're going to visit multiple coin shops, check online dealers, and get real numbers on premiums for American Silver Eagles, generic rounds, and bars. We'll talk about what this volatility means for stackers, whether this is a buying opportunity, and how to navigate these wild market conditions. This is purely educational content. I'm not a financial advisor, and nothing in this video should be taken as financial advice. Always do your own research and consult with qualified professionals before making any investment decisions. Let's get into it. Market context, 2-7. Before we hit the streets, let's talk about what just happened to silver and why it matters. Silver started 2025 around $30 per ounce. Throughout the year, we saw a historic rally driven by several factors: industrial demand from the AI boom, solar panels, and electric vehicles, continued supply deficits, geopolitical tensions, and concerns about currency debasement. By late January 2026, silver had exploded to over $120 per ounce. That's a 300% gain in less than a year. Then came January 30th. President Trump announced the nomination of Kevin Warsh to chair the Federal Reserve. Warsh is known as a monetary hawk who has consistently advocated for a smaller Fed balance sheet and tighter monetary policy. The market immediately interpreted this as the end of what traders were calling the debasement trade. Within hours, silver plummeted. We're talking about a 26 to 30% drop in a single session, the worst since Silver Thursday in 1980 when the Hunt brothers scheme collapsed. Gold also fell sharply, dropping about 9%. The dollar surged, and leveraged positions got liquidated across the board. Now, here's where it gets interesting for physical stackers. While paper silver crashed, the physical market tells a different story. Dealers are reporting unprecedented demand. People are lining up to buy the dip. Wait times are extending. Some products are going on allocation, meaning dealers can't get as much inventory as they want from the mints. According to reports from major online dealers, they experienced a month's worth of orders in a single day following the crash. That kind of volume creates bottlenecks in manufacturing, shipping, and dealer operations. When everyone wants physical metal at the same time, premiums tend to spike, even when spot prices are falling. So the question becomes, what are you actually paying right now? Are premiums compressed because spot is lower, or are they elevated because of demand pressure? That's exactly what we're going to find out. Street test methodology. 7 was 9 bucks. Here's how we're structuring today's street test. I'm visiting 3 local coin shops in different areas, one in a major city, one in a suburban location, and one in a more rural setting. I want to see if there are regional differences in pricing and availability. For each shop, I'm checking prices on 5 key products: 2026 American Silver Eagles, generic 1-ounce silver rounds, 10-ounce silver bars, 1-ounce government mint coins, like Canadian maple leafs, 90% junk silver, pre-1965, dimes and quarters. I'll also be checking several major online dealers to compare their premiums and delivery times. The products I'm focusing on represent the most common purchases for stackers, from premium government bullion to lower premium options for people stacking on a budget. For context, spot silver as of this morning is trading at approximately $81 per ounce. But remember, you never pay spot. Premiums cover minting costs, dealer overhead, shipping, and profit margins. In normal markets, premiums for Silver Eagles might be $3 to $5 over spot. Generic rounds might be $2 to $3 over, but these aren't normal markets. Let's see what we find. Coin shop Dura 1, urban location, 9-13 Tower. All right, we just walked out of the first shop, and I've got the numbers. This is a well-established dealer in a major metropolitan area. They've been in business for over 30 years, and they typically have good inventory. Here's what they're quoting. 2026 American Silver Eagles, $98 each for quantities under 20. That's a $17 premium over an $81 spot price, which works out to about 21%. If you buy a tube of 20, the price drops to $96 each, which is a $15 premium, or roughly 18.5%. Generic rounds, they had a limited selection, mostly from private mints, like Silvertown and Sunshine Minting. these were priced at $89 per ounce in any quantity. That's an $8 premium, or about 10% over spot. 10-ounce bars. They had both branded bars from recognized refiners and generic bars. The branded bars from companies like Asahi and Scottsdale were running $92 per ounce, which is $11 over spot per ounce. Generic 10-ounce bars were $88.50 per ounce, which is $7.50 over spot. Canadian Maple Leafs, these were priced at $94, a $13 premium, which is about 16% over spot. The dealer explained that maples tend to command slightly lower premiums than eagles, but are still popular government coins. Junk silver, this is where things got interesting. Pre-19. 65 quarters were going for 23 times face value. For reference, at $81 spot, the melt value of 90% silver coins should be around 19 to 20 times face. So they're charging about a 15 to 20% premium on junk silver. The shop owner told me they've been absolutely slammed since Friday. He said they typically do maybe 20 to 30 transactions on a Monday. Today, by noon, they'd already done over 50, and the phone hasn't stopped ringing. He mentioned that they're seeing both sellers looking to lock in gains and buyers trying to buy the dip. Delivery was immediate. They had everything in stock except for certain specialty items like proof coins. But the owner mentioned they're expecting their next shipment from the mint to be reduced. He said they're normal. Allocation might get cut by 20 to 30% if demand stays elevated. Coin shop number 2, suburban location 13 or 17 in Waus. Shop number 2 is in a suburban area about 30 miles outside the city. Smaller operation, family owned, but they've got a loyal customer base. Their prices were slightly different. 26 Silver Eagles, $100 flat for quantities under 10, $97 each for 10 or more. So we're looking at premiums of $19 and $16 respectively. That's about 23% and 20% over spot. Generic rounds, $91 each. That's a $10. Premium, roughly 12% over spot. They had a decent selection. Buffalo rounds, Walking Liberty designs, and some seasonal designs. 10-ounce bars, $93 per ounce for their house brand bars, $95 per ounce for name brand refiners. These premiums are running about $12 to $14 per ounce, or roughly 15 to 17% over spot. Canadian Maple Leafs, $96 each, which is a $15 premium, or about 18.5%. Junk silver, 24 times face value, which is a significantly higher premium than the first shop. At current spot prices, that's about a 20 to 25% markup over melt value. The dealer at this location shared something interesting. He said that on Friday during the crash, his phone was ringing off the hook with people wanting to sell. He bought a lot of silver that day at lower prices when spot was in the 70s. But by Monday morning, the calls shifted. Now everyone wants to buy. He said he's seen this pattern in every major precious metals volatility event. Panic sellers become FOMO buyers within days. He also mentioned that his distributor is quoting longer lead times. Products that would normally arrive in 3 to 5 business days are now showing 7 to 10 days. That suggests supply chain pressure is building. Inventory-wise, he had good stock on most items, but was completely out of fractional silver, half-ounce and quarter-ounce pieces. He said those sold out immediately because people with smaller budgets want to stack but can't afford $100 Eagles anymore. Online dealer comparison. 17. I was at 21. Before we hit the third shop, I want to show you what major online dealers are offering. I checked 5 of the biggest names in the industry, and here's what I found. For 2026 American Silver Eagles in individual quantities, prices are ranging from $95 to $102, depending on the dealer and payment method. Most dealers add a credit card fee of around 3%, so if you're paying by bank wire or check, you can save $3 to $4 per coin. The lowest premium I found online for Silver Eagles was about $14 over spot with bank wire payment, which is roughly 17%. The highest was $21 over spot, which is about 26%. Generic rounds online are running between $86 and $93, depending on the dealer and the specific product. The best deals seem to be on larger quantities. If you buy a tube or more, you can get closer to spot. Interestingly, several major online dealers have notices on their websites about extended processing times. One dealer says orders placed today might not ship for 7 to 10 business days due to volume. Another has a banner warning that they're experiencing order volumes 3 to 4 times higher than normal. What's really interesting is comparing dealer buy prices. If you're selling silver right now, dealers are typically paying about 3 to 5% below spot for generic items and closer to spot for premium coins like Silver Eagles. One dealer was offering $78 for generic rounds and $79 for Eagles. That spread between buy and sell. Prices, the bid-ask spread, is wider than it would be in a calm market, which tells you dealers are managing risk in a volatile environment. Shipping costs are also something to consider. Most online dealers offer free shipping over a certain threshold, usually $150 to $200, but some are adding handling fees or requiring signature delivery, which adds another $10 to $30 to your total cost. Coin shop. Farer 3. Rural location. 21 Mas 24. All right, last stop. This is a smaller shop in a more rural area. They're primarily a coin shop focused on numismatics, but they do carry bullion. Their prices: Silver Eagles, $105. That's a whopping $24 premium, or nearly 30% over spot. This is the highest we've seen today. Generic rounds, $95, which is a $14 premium, or about 17% over spot. 10-ounce bars, they only had 2 in stock, both generic, priced at $94 per ounce. That's $13 over spot. They didn't have maple leafs in stock, and their junk silver selection was limited to a few rolls of dimes priced at 25 times face value. The shop owner explained that his premiums are higher because he's a smaller dealer with higher overhead costs. He doesn't get the volume discounts that bigger dealers get from distributors. He also said he only orders bullion once every week or two, so his inventory turns over more slowly. What's interesting here is the trade-off. You're paying higher premiums, but you get immediate access, face-to-face transactions, and no shipping costs or delays. For local stackers who value the convenience and security of buying in person, that premium might be worth it. He also mentioned something important too. He's not seeing the same buying frenzy as shops in more urban areas. He's had a few more customers than usual, but nothing like the stampede happening in cities. This suggests that the buying pressure is concentrated in areas with more retail investor activity. Premium analysis, $24, $27.30. Let's break down what we've learned about premiums. For American Silver Eagles, we're seeing premiums ranging from $14 to $24 over spot, or roughly 17 to 30%. The average seems to be around $16 to $18, which is about 20 to 22% over current spot prices. For context, in calmer markets when silver was trading at $30 per ounce, you might pay $33 to $35 for a Silver Eagle. DOS a premium of $3 to $5, or roughly 10 to 15%. So even though spot silver is higher now, premiums as a percentage have actually increased. This is classic supply-demand dynamics. When everyone wants physical metal at once, premiums expand. Generic rounds are running $8 to $14 over spot, or roughly 10 to 17%. This is also elevated compared to normal conditions, where you might see $2 to $3 premiums. 10-ounce bars offer slightly lower per-ounce premiums, typically $7 to $13 per ounce over spot. If you're stacking purely for silver content and don't care about government mint coins, bars might be your most cost-effective option right now. Junk silver premiums are all over the map, ranging from 20 to 25 times face value, when melt value would suggest 19 to 20 times face. This 20 to 30% markup reflects the fact that junk silver supply is truly finite. They stopped making these coins in 1965, and the supply only shrinks as pieces get lost or melted down. What's causing these elevated premiums? Several factors. First, unprecedented demand. Dealers are reporting order volumes they haven't seen in years. When demand spikes, suddenly, premiums rise because dealers need to protect themselves against restocking at higher wholesale costs. Second, supply chain pressure. Mints and refiners can't turn on a dime. It takes weeks to produce silver coins and bars. Dealers are worried about being able to restock, so they're pricing in scarcity risk. Third, volatility risk. When silver can move 10 or 20% in a day, dealers widen their spreads to avoid getting caught on the wrong side of a price move. They might buy inventory at $85 and watch spot drop to $75 before they can sell it. Higher premiums cushion that risk. Fourth, processing and logistics costs have increased. With higher volumes, dealers need more staff, more secure transportation, more insurance. All of that gets baked into premiums. Tips for stackers, $27.30 to $30. So what does all this mean for stackers? Here are some practical takeaways for navigating this market. First, shop around. We saw price differences of 10 to 15% between dealers for the same products. A few phone calls or clicks can save you significant money, especially on larger orders. Second, consider payment method. Most dealers offer better prices for bank wire, check, or ACH versus credit cards. On a 100-ounce order, that 3% credit card fee can add up to over $200. Third, balance premium versus availability. Yes, you can sometimes find lower premiums online, but if the dealer can't ship for 10 days and spot price moves against you, you might end up worse off. Immediate local availability has value in volatile markets. Fourth, think about premiums on the sell side too. Silver Eagles tend to command higher premiums when you sell because they're recognized worldwide. Generic rounds sell closer to spot. If you think you might need to liquidate relatively soon, paying extra for Eagles now might pay off later. Fifth, don't try to time the perfect bottom. We saw silver hit $120 and crash to the 70s within days. Nobody can predict where it goes next. If you're stacking for long-term wealth preservation, these price swings are noise. Focus on acquiring physical metal consistently over time. Sixth, be aware of payment and delivery timing. In volatile markets, dealers typically lock in your price when your payment clears, not when you place the order. Read the Ostal, fine print on pricing policies, especially for bank wire and check payments. Seventh, watch for allocation and inventory constraints. If dealers start limiting quantities or certain products go on indefinite back order, that's a signal that physical supply is tightening. In past shortages, premiums can spike even higher and some products become nearly impossible to find. Eighth, consider constitutional silver, junk silver, as an alternative. Yes, premiums are elevated, but these coins are widely recognized, highly divisible, and supply is limited. In a true shortage, junk silver can be easier to find than new mint products. Ninth, keep perspective on historical context. Even at $81 per ounce, silver is up massively from just a year ago. The inflation-adjusted all-time high from 1980 would be around $194 per ounce in today's money. We're still below that level. Finally, remember that volatility works both ways. The same forces that drove silver from 30 to 120 can drive it back down. Stack what you can afford to hold long-term and don't put yourself in a position where you might be forced to sell at the wrong time. This is about building wealth over years and decades, not trading for quick profits. Physical silver is insurance, diversification, and a store of value, not a get-rich-quick scheme. Closing, 30 Morasto. That wraps up today's street test. We visited 3 local coin shops, checked major online dealers, and got real numbers on what you'll actually pay for physical silver right now on February 2nd, 2026, with spot around $81 per ounce. The key takeaway? Physical premiums are elevated due to unprecedented demand following last week's historic crash. You're looking at 15 to 25% over spot for most common bullion products. Supply chains are under pressure, lead times are extending, and dealers are managing significant volatility risk. Is this a good time to stack silver? That's a question only you can answer based on your financial situation, goals, and risk tolerance. What I can tell you is that we're in a unique moment. Silver is down significantly from all-time highs, but still dramatically higher than a year ago. Physical demand is surging and supply is tightening. If you found this street test valuable, hit that like button and subscribe for more on-the-ground precious metals content. Drop a comment below with your local premium observations. I'd love to hear what you're seeing in your area. Remember, this is educational content only. Always do your own research and consult with qualified professionals before making investment decisions. Thanks for watching, and I'll see you in the next one. Stay safe, stack smart, and keep stacking.